Welcome to the Recon Trader. In today's video, I will share with you some updated tactical analysis on the Bitcoin chart after the past few days of a sell-off. Now, in the previous video, I had let you all know that if Bitcoin's price closed below the ribbons, that would be an opportunity to get short, and that would be a very bearish signal for Bitcoin. Now, if you missed that video and were caught by surprise of this current price action, you might want to shoot that subscribe button so you don't run into these ambushes in the future. And with that all being said, by the end of the video, I'll take a look at a couple trade opportunities that might be coming up for Bitcoin depending on who's in charge, whether it's the bulls or the bears. So let's get into the weeds and get right to the charts. And we'll start over here on the daily candles for Bitcoin. And again, what we were looking at in the previous video was the daily candle right here, and we were waiting for it to close. And if we got the close, I had stated I would get a short position. I did get a short position, and I was able to capture over 21% profit with the use of a little bit of leverage, but I did actually have to wait for the price to bounce off of this trend line back into the ribbons and then reject from the ribbons and then get the further sell-off. Now, I could have actually taken the profit on this candle, but I was actually looking at the probability that the price was actually going to sell off a little further, and when it rejected from this trend line and went back into the ribbons and rolled over, I was actually able to add to my position on the way down, so I was able to actually increase the size of my position. So in the long run, I ended up winning the battle and got out of the trade for a decent profit. Now what I'm looking for is to see who wants to take control of the battlefield. Will it be the bulls or the bears? And right now the bulls are trying to push this price back up into the ribbons. If we reject and start to sell off again, that to me will be a signal to go short once again, and my profit target would be somewhere along this trend line depending on where we're at in the price action. However, if the bulls decide to join the fight and push this price above the ribbons, then I would also more than likely need to see that price close above 61,000, which is this yellow line you see running through the chart right here. That would be a prior level of support that has really turned into a level of resistance. Plus, it's right around the top of these ribbons anyway. So close above 60 to 61,000 would also be necessary. Now, if we got that, we could see something like we've seen in the past where Bitcoin actually breaks above the ribbons and then has a nice run towards the upside. And if we do get that run towards the upside, then I would be looking at all-time new highs if we can break the resistance of the previous all-time high of 69,000. And if we accomplish that, then we're looking at those targets I've discussed before of somewhere between 74 to 75,000, and above that, then we're looking at 85,000 to 90,000. But right now, the bears are in control as long as they hold the price under these EMA ribbons and continue to push this price down towards this trend line. And so we'd be looking again at probably somewhere around 54,000 or 52.5. But if it breaks below that, then we are more than likely headed back down towards probably 41,000 where we saw support previously. Now, if we jump over to the 4-hour candles, there are some trade setups that are possible here. First of all, I'm looking at a descending triangle here. Basically, if you look at this yellow line along the 55.6 where we have bounced off of twice, and also this trend line coming down to form that triangle, we have bounced off numerous times and rejected back down. However, the price is rebounding from the last rejection and coming back up towards this trend line. But first, you have to be in a downward trend to make it a valid descending triangle, which we are in a downward trend. As you can see, we have sold off and are headed down, where we do eventually get a bounce. And then we reject multiple times along this line, again get another bounce, and we could be headed back up towards this triangle. Now, a break above here could be a kind of what I would call a shoot and loot long opportunity, where you get in and take a quick profit, because again, we are more than likely going to run into resistance around that 61,000 level and perhaps even the 60,000 level, depending on where this would actually break out at. But you could perhaps still grab a nice profit with a little leverage on the break up above this downward sloping trend line. However, the real trade would be if we were to reject on that trend line and then break down through the bottom of the triangle. Then we could be headed to 54,000 or 52.5, and again with a little bit of leverage, that could be a decent win. Now, if we jump over to the 1 hour candle, there's another trade set up in this channel that has formed on the 1 hour. And again, we are rejecting from around 60,000 and coming down and bouncing off of this longer trend line. And right now, we are headed back up towards the upper trend line. So again, a break of that upper trend line, much like the 4 hour candles, could offer a quick shoot and loot opportunity. Get in quick, get out quick before we come into the 60,000 or the 61,000 level. However, on the flip side, if we break down, then we could be headed back down towards that 54,000 or even like around 52.5. However, I personally would be looking at the 4 hour candles. The longer time frames generally give you a little better intel. So right now, I don't think I would be trading off of the 1 hour candles. I might use them for confirmation. If we break above here on the 1 hour candles, then I would flip over to the 4 hour candles and see if we hold and close above that trend line, and then at that point maybe enter that shoot and loot position. Now we can wrap up over here on the weekly candles. We have been looking at this chart for a while now, and we were watching this blue line to be support, which is right around the 786 level on the Fibonacci levels, and it is right around 57,000. And right now it has provided support. The weekly candles are closing above this level. Even though we approached it on this candle, we dipped below it but managed to close above on last week's candle. Now this week's candle, again, we went even lower, yet have bounced back above this level, so it is proving to be a level of support. However, it is very early in the week. We have a holiday coming up, probably pretty light trading, so the bears could take advantage of that, push this price back down, and get this candle to close below this 786 level. And if they do that, the next target on the way down is going to be the 618 level, which is at 51,000, and that's this orange line you see running through here. And you can see it acted as resistance previously. Back here it acted as support on these wicks, and so I would be looking at this 618 level at around 51,000 to maybe around that 52.5 level we've been talking about. Somewhere in that zone could be the next level of support if the bears are able to get this weekly candle to close below the 786 level of 57,000. Now after that, then we're looking down at around the 50% level, which puts us at 46.8, call it 47,000. That level has acted as resistance and support here and support back in this area. So that would be a valid level. However, I think if we break through the 51,000, we could see at a minimum a long wick down into the 42.5 to 41,000 level where we have found support in the past. Now on the flip side, if the bulls decide to step up and push this price back above, we once again are looking at 60,000 to 61,000. That's the real first target for the bulls to get above and close above and hold above. If the bulls can do that, then we can head back towards all-time highs of 69,000. And after that, then we're looking at the 1272 level, which is around 75,000. And up above that, we would be looking at the 1618 level, which is going to put us right around that 88,000 mark. So the bulls in reality would have a lot more work ahead of them than what I think the bears actually have ahead of them. But remember, elite traders don't make predictions. We just watch the charts and look at probabilities of what direction the price could go. And based on those probabilities, we then enter our trades accordingly. So I think that's pretty much going to wrap it up. So if you don't want to miss future update videos on Bitcoin's price action, I suggest you shoot that subscribe button. If you like this video, do me a favor, spike a like. If you have any questions, feel free to drop those in the comment sections down below. I will leave a link to TradingView in the description down below so you can do your own charting. And by the way, TradingView is having a Black Friday sale of up to 60% off. Now, I have the premium account, and for only $288, I can renew for another 13 months of the premium account. And I think that's somewhere around $22 a month. In my book, that is worth every penny to get the premium account. You get a lot more alerts. You have access to more candle patterns, indicators. You can publish your own indicators. But keep in mind, you can start with TradingView for free, or maybe start with the Pro plan for $100 for 13 months. So, in closing, remember, never send your money into battle without first doing your recon. See you in the next video.